Yo, what's good? What's good, everyone? My name is Bastian. For all of you who may not know me, welcome to the Inner Wealth channel, or welcome back to all of you who are returning. Guys, thank you so much for tuning in, week after week, video after video. I know that there's a lot of content on this channel, and there's so much more loading. So with that, guys, I want to bring your attention over to the ABCs of Smart Money Concepts. Okay, this playlist, guys, that you guys are on right now, if you haven't yet, even if you are somebody that's more intermediate into trading, if you have not yet, please head over to the beginning of this playlist and make sure you watch every single video on this playlist. I know there's a lot of basic information on here, but it will also allow you, the student, to understand the way that I break down my charts and what I'm personally looking for, and when I do mark up my charts, what I'm talking about. I want you guys to have full awareness of what it is that I'm mentioning throughout every single one of these calls. So for that, it may require you to go back a couple of videos, right? So I welcome you to the rest of this playlist. Now let's dive into today's lecture, which is all about something that you guys have seen me talk about again and again. This isn't the first time that we're going to talk about it. So this is all about support and resistance. Okay, so let me start by saying that support and resistance is something that I've been taught multiple times, and every single time that I've been taught support and resistance, it's been different. Okay, so I'm sure this is not going to be any different for you, because I'm going to show you guys what support and resistance is for me. Now, this is why I want to tell you guys and start with saying that this is what it is to me, and be very and clarify that this may not be your traditional support and resistance. This may not be your traditional way of looking at price action. Okay, and I want you guys not to take this information and just apply it, but I want you guys to take this information and back test it. I want you guys to challenge everything that I tell you guys, everything that I show you on this channel. I want you guys to challenge it and test it against your own theories, test it against your own strategy, right? Test it against your own edge against the market, right? So the way that I personally look at support and resistance, so now let me just write down so you guys have it, and everything that I write down, guys, I want you guys to write it down as well. Alright, so today we're gonna go support and resistance levels. Okay, and there's gonna be a couple different ones that we're gonna go through. So they don't have a specific order, so I'm not gonna number them, but you guys already know these, because if you've been following through all the playlists, then you know these by heart. Okay, so first one will be the order block. Okay, I might have been holding that button a little too much, my bad. 1 second. Okay, first one is the order block. I held shift down way too long, so that noise came up. Apologies. So order block. Okay, then you have IPA, or imbalance, right? Then you have previous highs and lows. Okay, all of these are going to look very familiar. So liquidity levels, previous highs and lows are liquidity levels, right? And these are going to be basically where your three main support and resistance levels are derived from. Okay, so order blocks, imbalances, and previous highs and lows. And so matter of fact, we're actually going to keep these in the corner right there, and I'm gonna show you guys the examples of these. And I believe that the best examples I can give you are all basically right here on the screen. So give me 1 second. Let's delete that and then anchor this text instead. There we go. Okay, let's put that up there in the corner. Alright, so the different levels. So everything, I guess, up until this point that you guys have learned about order blocks, the breakers, the opens, imbalances, the imbalance opens, the middle, the 50% of imbalances, previous highs, previous daily highs, previous weekly highs, previous monthly highs, previous monthly lows, previous weekly lows, previous daily lows. Everything that I've taught you guys up until this point will be a level of support and resistance. And I like to keep price action super simple. Okay, so everything that we've learned so far, to me, in my eyes, is a level of support and resistance. It's in a way you can call these levels institutional levels. Now, these institutional levels, of course, there's specific ones that I look for. I don't just look for any order block, any imbalance, and any previous highs and lows. Okay, so I'm gonna go through all this list and how I personally use it. Okay, so first let's go to the weekly. So you guys know, first one, order blocks. Okay, so you guys know, as we've seen before, in a bullish price action, every previous down push is a order block, okay, to take us up higher. So every time we create a higher high and a higher low, the moment we create a higher high from that higher low, that previous down push becomes our bullish order block. Okay, and if you guys don't know what an order block is, I have videos in this playlist that walk you through, 2 videos that walk you through order blocks, and there's going to be many more videos uploaded following this. Okay, and so higher high, higher low, higher high. Okay, and we're just going to mark out the open of the order blocks. Okay, the moment we travel above the order block, we're gonna mark it out. Okay, so price action comes above this high right here, and so we're gonna mark out that order block, this whole down push right here. Okay, now we come back to it, we trade above, we come back to it here, and then we trade higher. Once we trade higher and above this one, the open of this one becomes our new level of support. Higher high, higher low. Look where we come down to. Higher low. Okay, and then once we create this higher low to new higher high, we have our new level of support. Okay, which is this whole down push. Where did this whole down push start? Right up here, right? And so you guys can see we trade above it, we come back down into that area of support, and then that opening, because that was the previous area of accumulation, acts as a level of support for price. Okay, so price comes into it, trades up. Okay, and then we're gonna move over here, higher low, higher high, previous higher low here. Check this out. I want to show you guys how fractal this stuff is. Look what happened right here. Higher high, higher low. Okay, check this out. See that? The opening of that down push is our new area. Okay, that's a new area of support for price. Okay, support is when price is trading above it. Okay, so if a level is down here, the price that trades above it, that area can now become support. If we're trading below it, it is resistance. So since price has already traded above this previous high, we can anticipate price action to return. And look at what happens with the next candle. We come back into it, right? We trade back into that level of support, and then price explodes the other direction. Okay, so price action, higher high, higher low, higher high, and you guys can see here, boom, we break, right? We have this previous area of support, price action trades above it, and then what happens? We break structure, right? We break structure right here. There's a nice break of structure right there. Why? Because we created a higher high, higher low, higher high, and then we did not create a higher low, we created a lower low, right? So we broke structure right there, right? And so this is no longer an area of support. Now when we're walking price action down, every previous up push, okay, every previous up push, once we create a new low, becomes a new area of resistance. Okay, so you guys see this entire push up here. Give me one sec. Let's create that as an order block. Boom. Okay, the opening of that being, our area of resistance. We trade below it, we come back into it, boom. You guys can see here we didn't just trade to the opening, but this is where I'm going to introduce the second level inside an order block. Okay, there's 3 levels. There's 3 levels that I use. There's actually 4, but there's only 3 that I use. There's 4 levels overall over an order block that you would use. Okay, and I'll show you guys all 4 here on this push up. So there's 4 parts to a candle, right? So you guys can already kind of anticipate which 4 levels of the candle I look for. So the first one is the open of the order block. The order block is these 2 consecutive up pushes. So the opening is 1. Okay, so we're gonna go over here to the order block. I'm gonna go to the open. The second is, for me, well, I guess the first should be, this is a bullish example, so we're gonna put here in an order block a bullish candle. Okay, so we're gonna put the low of the candle, the open of the candle of the order block, 50% of the order block, the close of the order block, and last but not least, so I guess there's 5, the high of the order block. Okay, and I'll show you guys how all of these actually come into play. All right, so the low of the order block being down here, sometimes, guys, we won't even come, sometimes we don't even come all the way down to our order blocks sometimes. Okay, and it does happen. Sometimes all we do is come back down to like the wicks. Okay, and so I wanted to show you guys a really clean example of that, but I don't see one off the top of my head. But I want to show you guys, sometimes, you know, this candle right here just happened to come to the open, but sometimes we just come to the highs, right? So this is a bearish example, so you guys can see here we come to the high of that candle. That's an area of support. And the lows of a bullish or of a bearish order block, the low acts as an area of support as well. And I'll show you guys, of course, more examples as we go on. Okay, then you have the open. Okay, then you have 50%, which I'm gonna measure here. 50%. Oh. Okay, you guys see how 50% of the bodies of this order block here, that's what creates what we call the mean threshold. Okay, and that's an area of support or resistance. In this example, it's an area of resistance, and in bullish example, it will be an area of support. Okay, that's also an area of resistance or an institutional level. Okay, and now I want to bring you guys' attention to when the highs of candles can also be a level of support. And this is going to go kind of into the previous highs and lows, but notice, okay, we have this whole up push here, which is our order block. We have the opening, we have 50%, but right on our extension down from this high to that low, okay, I want to bring your attention over to this range. From this high to this low, while we returned back into that order block, notice that we took out that previous weekly high candle. Excuse me. So because we took that previous weekly high candle, that's a previous high, right? That's also the high of an order block, which is why I was telling you guys, it's the low, the open, 50%, the close, and the high. Okay, this is an example as to when price action came to the open. Price action also came to about 50% of this range, which was about right there if I'm not mistaken. Okay, and so we played 3 areas of support, of resistance here: the opening, 50%, and a previous candle high. Right, so there's multiple levels here indicating for price action to move to the downside. There's multiple indications giving us confluence to add to our short bias, right, in this example. And so I want to keep showing you guys examples throughout this recording. Okay, so you guys can see we created a lower low here, a previous high, and notice 2 things happen here. Okay, did we come into any previous candle? No, not yet. We created a lower low, right, a low and a high. Now, not always, guys, write this down, this is very important. In structure, not always will your retracements come back to your areas. This is where this teaching was very important. Not always in every retracement do your price action come back. Sometimes, guys, price action doesn't come back to the area that you anticipated because you're not looking at all the areas of support and resistance. So our trading range here would be from this high to this low. 50% and above is all of this, but notice price action never comes back to that. Okay, price action doesn't have to come back to that, and I'll show you guys why. Because we created a lower low here, lower high, lower low, but notice, what did I just teach you guys? Between that range, between your range and that high and that low, there's this high right here. Boom. Notice there's this whole imbalance right in here. Insufficiency, or IPA. We're going to call them imbalances, okay? There's that whole imbalance. That imbalance is also a previous weekly high candle. Notice we come into that previous weekly high and then just fall, right? What happens here as well? Notice. One sec. Went back too far. Okay. We come into that previous area of resistance, which is that previous high, which is also an imbalance, right? An imbalance. Which is also the high of that order block, right? This is why I don't like to overcomplicate it, and I like to just keep it simple. These are just areas of support and resistance. This is why every time you guys see me put an orange line on my chart, it's because that's an area of support or resistance, right? So, okay, that acts as an area of resistance for price. Then we trade below it. Check it out. We trade below it. We close below. Boom. And then we get a new candle. What does the new candle do? Trade below it. Comes back into the opening. The open of that order block. Not just that, but it comes to about 50% of that order block as well. The order block that created that high of that imbalance. Right? That same order block. We're coming back and playing it again, and then we fall, right? And so what I want you guys to understand is that resistance, support and resistance isn't just candles. It is the open, it is the low, the open, 50%, the close, and the high, right? Here it was the high. And notice we're mainly playing order blocks. That's all we're playing. I know I put imbalances there and previous highs and lows, right? But that all fits into the order block section. This imbalance was created by two order blocks, right? And this level of resistance here was created by an order block, the high of an order block, which is also a previous weekly high. Okay, now let's go down to the daily, as I want to make sure you guys truly understand this. Okay. Now, notice we come into that previous area of distribution, which is also an imbalance here on the daily, and then reject to the downside. What do we create to the downside? An imbalance. What do we have here? A nice gap on the daily. Boom. That becomes my new level of support. We trade below it, we come back into it, then trade away. What do we create on the way down? And we create a gap. Again, same gap. Okay, what is that? We trade below it, we come back into it. That's our new level of support. Then we trade back down. Now notice, we didn't just trade back into it. We took out all these previous daily highs, this previous daily high, this previous daily high, and that previous daily high. All three of these previous daily highs got taken out as we came into this gap. Support and resistance, guys. Support and resistance, right? Support and resistance. All right, we come back to this low, right? This is the low that pushed up right here. That is a level of resistance. Price action trades below. We come back into it and then reject to the downside, right? Notice that before we reject to the back down, we came up to that level of support. Okay, but notice almost every time we melted back to the downside, what did we do? Before we melt down, we sweep previous daily high, we melt down. We come into that level of support, we sweep that previous daily high, then melt down. Then what happens here? We come into that previous area of support, sweep that previous daily high, right? Because that's a level of resistance there. We come to this level of resistance, then sweep that previous daily high, which is resistance, and then just melt down. Notice we do these things again and again and again and again, right? These things happen consecutively. Okay, liquidity sweeps, runs on liquidity, are resistance and support. The opening of imbalances are support and resistance. The 50% of of an imbalance is support and resistance, right? All of these areas are support and resistance, these institutional levels. To not overcomplicate your trading, the order blocks, the imbalances, the previous daily highs and lows, those are all previous areas of support and resistance for price. And when multiple of those line up together, it is an even stronger confirmation for price to reject off that level. Why do I look for these? Because on the next video, maybe not the very next one, but in a couple of videos, 1 or 2 more videos, I'm going to show you guys how I personally utilize support and resistance levels for my entries and for my exits. Okay, which I'm pretty sure you guys are already getting an idea. But we have one more video before we get to entries and exits. 1 or 2 more videos. So be patient with me, guys. I appreciate you guys tuning into this call. I know it was a little bit longer than usual, but I really want you guys to understand support and resistance levels. This is the way that I've used it. I've been taught through many individuals, and this is the way that just makes the most sense to me when I look at a chart. So with that, guys, I appreciate you guys hopping on, being here, sharing this time and space with me. Please drop it down below if you guys have any questions, comments, or if this video was easy to follow. If it was easy to follow, share this playlist with somebody that may benefit from this information. This playlist is very basic information. I know it's not like, you know, brand new information, right? You got to know some terminologies before diving into this playlist, but share with anybody that may benefit from this, guys. I will continue to put out content, so I'll see you guys here on the next one. All right, take care, and please don't hesitate to ever reach out to me. Again, I'm gonna always share this with you guys because I want you guys to know that you can always reach out to me here on Telegram or on Instagram. Okay, you guys can always reach out to me directly on my messages. Guys, just know that I will never ever reach out to you first. And if you guys ever have questions, if you guys ever want to run like a one-on-one coaching with me, I run one-on-ones. Okay, I run one-on-one coachings with students. I do free consultations if you have any questions about my private mentorship. And of course, you can get access to our private and exclusive mentorship here at Abundant Capital on the second tab of the link in the description. Guys, with that, I will leave you with all that information. I know it was a lot, but if you guys have any questions, again, down in the comments below. I'm more than happy. I'm always active and listening. So with that, guys, take care, clap easy, and trade responsibly. Peace.